Welcome to Lighthouse Outlook, the podcast where we talk less about the markets and more about what matters to the people navigating them. From family offices to founders, we go beyond the numbers to unpack risk, legacy, and the human side of capital. Hosted by the team at MacNicol & Associates Asset Management.
All right. Well, hello, everybody. It's Joe Pochodyniak here. I'm one of the managers at the MacNicol investment team. Welcome to 2026. We're calling this one New Year, New Opportunities. And I know a lot of you, just sort of in speaking with you early in 26, are doing things like starting off a new diet. Maybe you're getting more serious about your exercise regimen. Maybe you've quit smoking. So good on you for all of those things. And so what we thought we would do is put together a quick podcast here focused on your investments and your savings. And so we'll be talking about that in a moment here. But before we do that, I just want to draw your attention to the fact that nothing I say here is going to be direct investment advice. Of course, we do that full time here at the company. But we need to do that in person with each and every one of you. So if you want some great advice, we've been doing that for 24 years. And if you know somebody who could use some great investment advice, please feel free to introduce them to us. I'll go ahead and put our contact information on the screen at the end of the presentation. All right, so let's get down to business. Put up your hand if you want to pay less taxes and have more of your investments compound in a tax sheltered way. I know I certainly do. And for many Canadians, one of the best ways to do that is with an RSP. So in this initial slide, we really want to put you ahead by just sort of drawing to your attention that the 2025 RSP contribution deadline falls on March the 2nd. So just to kind of go over the timing of that, because it's a little bit tricky, is you have up until March 2nd of this year, we're now in 2026, to add money to your RRSP for last year, 2025's contribution. And so what that allows you to do is this year, when you file your income taxes, you can speak with your accountant or whomever and mention that you've contributed to a registered savings plan in time for the deadline. So March the 2nd, 2026, very important date. If you've got a cell phone camera with you, by all means, go ahead and take some shots of this screen. The maximum deduction limit for your contribution is going to be $32,490, which is a good beefy number. And that would actually require a salary of 180 earned in 24. So again, the way RSPs work is you have to be over 18, you have to have T4 income, and that income is based on the prior year's number. So you can also add to that any unused contribution room that you did not have. So if you were maybe focusing on other things earlier on, you haven't lost that RSP contribution room. You can actually add that to the numbers on this screen. And if you'd like more information on that, definitely get in touch with our great team, Angela, Luke, or Rushi. Any one of us can actually help you top up your RSP and get you going on a lot of that tax deferred growth. And of course, the deductions, which are fantastic. So let's get going here. Now, in 2026, now we're in a new year, kind of past that March 2nd cutoff for practical purposes. The new contribution limit for 26 is going to be $33,810, right? And what we found, just being in the industry, is that the people that get to this number most effectively are kind of the ones that do it on a regular basis. So you can certainly do it on a lump sum basis, but dollar cost averaging is actually a lot more powerful than people might suspect. Investing 101 things that I sometimes think gets lost. But many of our investors do maximize their deduction limits by utilizing an automatic monthly savings plan. And I believe it's set up through our partners at Raymond James as a bill payment. So once again, do get in touch with our team if you'd like more help on how to do that. Really, really effective way to pay yourself first, extremely important. And once again, keep more of that money in your pocket and outside of the the building down there in Ottawa known as the Canada Revenue Agency. And again, this will essentially affect an increase beginning in March. So just to highlight the timing. Also, tax-free savings accounts. So if you are a little bit older and you've already been contributing to an RSP for many, many years, and your T4 income is starting to come down, or maybe you're kind of scaling back your work life and transitioning into retirement or semi-retirement, listen up. Because now that we're in a new year, you can actually add another $7,000 to your tax-free savings account, plus any monies that you may have withdrawn from your tax-free savings account in a previous year. So one of the great things about TFSAs is their flexibility. All of the growth that you get within a TFSA is going to be tax sheltered, but you don't get the deduction limitations that you do with an RSP. So there's a little bit of a trade-off there. And our team has also automated this for many of our investors. We actually do this quite often. A very popular savings technique is each January to just go ahead and transfer assets from a non-registered plan, or maybe you got a year-end bonus from where you're working, or a royalty on some piece of intellectual property you own, and you can go ahead and put that right away into your tax-free savings account. Also, given that we're in 2026, and this number actually, I kind of thought it would be this number, but it did surprise me. Now that we're in 26, if you've never opened up or contributed to a tax-free savings account before, you can actually park away $106,000 totally sheltered from the Canada Revenue Agency. Again, the flexibility of in and out privileges without strings attached. But remember, you don't get that income tax deduction. And another extremely popular feature with some of our more mature clients is that tax-free savings accounts are a very effective estate planning tool, because these monies actually bypass probate in most situations. So don't let that one squeak by you. There's a few other things I want to cover off here. Children. So many of us have children, grandchildren, nieces and nephews. They say that the best investment you can make is a good education, and I would certainly agree with that. So parents, listen up. If you have children that are under the age of 19, you can actually contribute $2,500 per child to a registered education savings plan, also known as an RESP, and that'll be matched by the Canada Education Savings Grant Program. So it's a pretty good deal. You get 20% or up to $500 per child for the $2,500 that you contribute. You can also do it in a lump sum basis, but remember that the grant only applies to the first $2,500. So again, lump sum versus kind of steady training and discipline. Always better to kind of get in the habit of contributing to these programs sequentially, meaning each and every year, kind of on a regular basis. And our team can get you set up and help you with that in order to maximize that grant. So we like to make fun of the government, but there are things that the government can, believe it or not, actually do for you. So don't lose that $500. And then finally, for this one, I just wanted to point out that first home savings account, really an important innovation that I believe occurred in April of 24. Don't quote me on that. But you can also put $8,000 into those accounts if you are saving for a first-time home purchase specifically. So again, just make sure you're aware of all these things. And if you do have any questions, do get in touch with us. Okay. So a couple of very important things. Definitely get your cell phone cameras out for this one. For most individuals, the main Canadian tax filing deadline for the 2025 tax year, so last year, is this coming April, right? So April 30th, 2026. You do want to make sure that you filed by that point, especially if you owe. And if you or your spouse or common law partner are self-employed, so you run your own business, you actually have until June 15th to do that. But definitely, make sure all of your tax reporting is up to date, because that will make life just a whole lot easier for you and a lot less stressful. So I want to finish off with a couple of things because we kind of talked about some planning features that you can do to help put yourself first, and I think that's really important. But we here at the MacNicol investment team also want to take a look at the performance of financial markets. That's something we do all the time. And you can see here over the past year, financial markets on the most right-hand column have done really, really well. In fact, many of these global indices around the world, not just here in Toronto, have done really, really well. And so we think that overall the market for stocks and other investments is positive, is constructive, but we're not taking any chances, right? Even as we transition into some of these other asset classes, commodities were a little bit more mixed. Oil had a more of a challenging year over the last 52 weeks. Natural gas is the same, but gold and silver, which we've been invested in for years, have done extremely well. I actually did not know that silver was up 125% on a 52-week basis. Would have been good to know that a year ago. But here we are. And so you can really see a mixture of return outcomes in the commodity and miscellaneous space. Of course, Bitcoin off about 8% on a one-year basis. So things are kind of all over the place. But overall, we are feeling pretty good. And as it pertains to equities in particular, we do acknowledge that equities are for sure trading at elevated valuations. There's a number of metrics we can direct you to that would speak to that point. One of the ones we talked about in our latest commentary was the so-called Warren Buffett indicator, so total capitalization as a function of GDP. That one was in the 220% range. So again, a lot of these indicators are pointing to the fact that stocks by many accounts are expensive, but that does not necessarily mean they're going to crash today, tomorrow, next week, or even this year. Nonetheless, our team has taken great steps to ensure that if something really bad happens in the stock market, we are protected with our new safe harbor fund, and that is the focus of this slide. Now, I've already, and it's only early in January, I've already had discussions with a couple of new investors, and we always welcome the opportunity to help more investors with their money. But I had a discussion with an investor the other day who had a balanced portfolio, and it was one of the big fund companies. I won't say who. And her biggest question was, why is my portfolio not doing as well as some of these other indices that we talked about on the previous slide? And I said, it's the simple fact that your asset allocation is really antiquated. It's sort of that old school approach to balanced portfolios. We take that into consideration here at MacNicol. Asset mix decisions are extremely important. But, one of the things that we've done is launched our new Safe Harbor Fund, which we think is going to be an even better risk mitigation strategy because it allows you to stay fully invested. You can contribute to all of these fancy accounts we talked about earlier and have your money grow. And then if there's a correction in stocks, you're protected with our coverage there. So if you're seeing this for the first time, definitely go ahead and request a call or some information from us. We're the only asset manager with this type of strategy in the country, so it did take a lot of work. We're glad to do it, but make sure you and those around you are really exploiting the full value of our work. Otherwise, it wouldn't be that effective. So I want to thank you for your attention early on in the year. It is a quick moving year already, so do call or email us today if you have any questions. Reminder, our brand spanking new shiny office at 3080 Yonge Street is open for business. We're at Suite 4076. You can come in and see us live in person or through video conferencing. 866-367-3040 is our number. And of course, our email account, info@macnicolasset.com, is there for you and anyone important to you. Thanks very much. I want to thank my colleagues, Ken Reed and Luke Juha, for helping me put this thing together. It's always a pleasure doing it for you, and safe investing. Thanks very much.
Thanks for listening to Lighthouse Outlook. If this conversation sparked a new perspective, share it with someone who thinks differently. Subscribe for fresh episodes every 2 weeks and visit MacNicolasset.com to learn more.